All right, here we go. Here we are live with the 5ers Live Trading Room again. And look at this. We got Victor, we got Saul, we got the whole gang here. We're only missing Alex though, but Saul's good enough. All right, Saul's good enough.
Give me that.
How's it going, man?
I'm great. How are you guys?
Yeah, we're doing fine. Before we go into the charts and we start talking about technical analysis, we've just announced a really.
Hello, everyone.
Hello.
We have a great show for you today. We will be trading live with Saul, and you will see the three of us hitting the market the best way we can. So stay tuned.
So today we've announced a challenge. Like it's a pretty awesome, cool thing that we're testing here within the Discord community. It's called the One for All Challenge, and it's basically going to be a challenge where we're going to have 5 team leaders that are going to be able to monitor and manage a huge trading account, a 1 million trading account, and they're going to be trading that as a team. And there's going to be some really exciting prizes for that as well, and the winners. So all of that is going to be happening inside the Discord, and of course part of this live stream will be looking into the Discord, see how they're doing. But the reason why I'm saying this to you guys is if you're not in the Discord, you have to go to your to the hub in the 5ers, your account with the 5ers, and go use that Discord link, which is available when you log in and have a purchase evaluation account or a funded account. And if you do have access to Discord, make sure that you go to the event channel and check out the announcements. So that's going to be very, very exciting to follow along that challenge. Victor, are you looking at any trades today? I think now that we have Saul here today, I think I want to be I want to continue with the scalping that I've done with the bootcamp account on EU, and I think we're that's kind of like what I want to be focusing on today. Try to see if we can find something together on EU here with Saul, because I believe, Saul, that's the pair that you are mostly trading, right?
Yeah, that's the most I trade. Although previous weeks were trading the dollar yen also.
Yes, correct. We were looking for that dollar yen. Indeed.
Yeah,
we had a little. I don't know if on your side, guys, but on my side we had a little glitch where it's kind of had a little pause in there. I don't know if you guys noticed, but maybe it's my side. What I'm looking at is GU. GU is in a, and perhaps I can show my chart, to give the audience the visuals to talk more easily. All right, so I'm going to put my screen on. Let's see. Yep. So let's see. What I see is on the we've been talking this. We are getting into that area of the previous place where the sellers came into the market. This is the daily time frame. So to me, that's a possible area of supply. And what we see is we have taken out, and by taking out, I mean by the wick, we have taken out that previous high. So the question is, are we going to have a double top or not, right? Very basic idea. And if we are going to have it, then we should be forming bearish structures now going forward on the lower time frames to begin with, which would be a precursor of a possible reversal in the market. And we go to the H4. I do see we have some kind of reaction of a structure to the left, but currently I don't see that. Right, we did have that reaction right at that top, at a relevant H4 order block to the left, but this area is more relevant. Are we currently showing bearish structures? And we're not. So that's interesting. One thing that I would be looking, and what we do have is we are forming bullish structures, which is this H4 order block. So I'm looking for actually a long, even though on the macro I have that scenario that possible we could be looking for some selling pressure coming in. So that's what I'm going to be looking for, pound GU, pound dollar today, and see if we can get an entry long.
Yeah, so I'm
Yeah, go ahead.
What I'm looking. Yeah. So what I'm looking at, you let me show you what I got on my screen right here. I've just opened a long on E right here, and then what I see is a fairly clean, a fairly clean market structure shift right here. With this is on 1 minute, right? So we have I'm watching a range here, quite easy. I'd say it's quite easy to recognize this range here, with the range lows being here and then the range highs being here, and we have a very clear shift in structure here on the lower time frames. I would say that this is a almost like that picture perfect break of market structure. We have lower highs right here, so you get the lower highs, lower lows, and then that transforms into higher highs and higher lows, with that being on the low. So I'm basically just looking for a move back up to this area up here where we broke down. Now, again, I'm doing this challenge on the 25K bootcamp account. And again, the practice here is I'm not expecting to win this evaluation, but this whole practice is to learn to execute flawlessly as soon as there's an idea. Because with swing trading, I don't have the I have the luxury of being able to wait. But now when I'm on the lower time frames and we're looking at the lower time frames, for scalping, I want to make sure that there's no friction between seeing an idea, seeing a possible edge, and executing. So as soon as I see something, I'm going to execute on that idea without hesitation. And if I can do that and be profitable on this evaluation, that's great. But over the course of many trades, I'm expecting that it will help me execute more, almost on a intuitive level. So for those of you watching this, this might be a practice that you want to do as well. Now, you maybe not on an evaluation account, but you can do a demo or use on a small account and make sure that your the risk that you have on that account is you're okay with basically losing everything. But the idea is to remove the fear of executing a trade. If you are able to remove the fear of executing the trade, that's going to be very, very helpful with any system that you're trading. All right, Saul, what are you looking at?
My turn. But Jonathan, how are you feeling now? Look, working on a 1 minute chart, you were more comfortable swinging. So how are you now feeling on a 1 minute chart performing there?
Oh, it's not feeling great. I'm honestly, this is I really want to be a scalper, but I can't. Like I feel stressed. Like yesterday, I spent like 2 hours just staring at the screens and just taking trades, and like I'm not even risking real money. Well, I am. I'm risking $95, right, for the challenge, but it's not a live funded account. But I still feel that it's just the focus that's necessary is really stressful, and it's actually quite tiresome, looking at this 1 minute and because you're making so many decisions in such a small amount of time. So yeah, I must say that with time it's getting better and better and easier, but it's a struggle really looking at the lower time frames when you're used to the 4 hour basically.
Yeah, absolutely. Yeah, let me take this trade.
But that's how we grow, right?
I'm going to pull up your chart here. So, are you shorting?
Yeah. So I'm sticking to dollar yen because I was watching through dollar, euro dollar, and pound dollar, and I'm with you, Victor. I'm not sure. Like pound dollar has been looks like bullish on the dailies, but then you zoom in and you don't see at least I don't see the strength behind. So I don't know if it is going to continue or reverse. So I'm kind of hesitant. But when I go to dollar yen, I see the level, the volatility is there, the levels are there. So I'm sticking to dollar yen. This is the dailies, and last week we were discussing, this level. Okay, we're waiting for price to touch this level. Actually, it was I believe there was a news that created this strong candle, a bullish candle towards that supply area, and you know, the area held, and now we got the reaction and we pushed strongly to the downside, and now we're, you know, of course, testing this area, which is the second time we're testing it. And if we see this, you know, second reaction, where now this impulse to the upside has been very weak. And if I zoom in there into that reaction, we see the nice channel approaching now this supply area. So we're kind of, you know, working around that area, and then I zoom in even more to the 1 minute chart, and I'll be trying to, you know, to build into short positions. So I'm waiting for any pullback towards the upside to selling areas. So maybe this one there, or this top one, and I'll be selling because I believe we're reacting to currently to this supply area, but the volatility is there. So I think I can, you know, we can do some nice scalps both directions, but mainly bearish, as the whole structure from the dailies is currently bearish.
I think when you zoom out, I think you were on the, maybe if you go to the 5 minute, if you can go to the 5 minute.
Yep.
Yeah, looking at that structure right there, where you have it's almost like that picture perfect, you know, top formation as well, where you have that first a downtrend, you know, creates a low, breaks into uptrend, and now you're forming a I would say, like on a low time frame, like distribution pattern, right, with equal highs and equal lows after an uptrend. And it looks like it really looks like it wants to, you could say, like, if it breaks down here, in hindsight, that would have been the perfect top formation. And I like to think about that sometimes, because we don't know if that's going to be a top formation now, but if it breaks down, then that we would look back and say, yeah, that was the perfect top formation. And if you can try to think about that, you know, okay, we're seeing a pattern right now, but what do I think about this pattern if price moves up or down? And I think that's a good learning exercise.
Yeah, absolutely. And I think, you know, we recently took this low, so there might be some support there, but I feel there's some pressure. You know, I keep reading the candles, and I see, you know, we just saw real time this candle, the current one. We saw the push to the upside and the rejection to the downside. So I think there's some hesitation here in the market. There's definitely some you know, down pressure. The fact that it's not following through, you know, makes me, you know, wonder if I should, you know, just grab some profits before waiting for the next push to the upside. But I think we have some potential to go to the next, you know, demand area, which is, you know, down here, probably now looking at, you know, on a better time frame. So the initiation of it, you know, around that area. So if we manage to take this pivot here, we have nice, you know, we have the confirmation and opportunities to go to the downside. But even if this goes, you know, now one leg to the upside, I think I have, you know, enough room and enough levels there to keep building into my short position and, you know, come on the winning side, hopefully.
So
I just closed it's a quick update here. I just want to update you. I closed this trade right here, so you saw that. Let me put on some levels here. But usually when I'm trading, I don't really add anything on the chart, but obviously it's easier for you guys to see. So what I traded on was, I entered here, right, and my profit target was up here. But then I saw that I had like a strong move to the upside. So the market first went down a little bit, and then it gave an impulse move to the upside. And usually when I have a strong move like this one, it's basically it's free money. So I'm taking that you know, I'm taking that profit and moving on to the next trade. And the next trade will be possibly short up here. So just looking at this low time frame range right here. But you know, a lot of people, you know, they would say that, well, you took profits too early. But if it's one thing I've learned when I'm on the lower time frames, it's you got to take that profit when it's available. If you're making money and you're getting that money in just a couple of minutes, you take that and you look for the next reaction. Would you say that that's the way to go?
For me, you know, there's not such thing as bad taking profits. You know, it's always a thing to take profits. And especially the lower time frames, you will have multiple setups and multiple opportunities to grab more profits. But, you know, only backwards, you know, if that was the right decision or not. You know, you always take that trade that you take profits and go and flies in your direction, but you need to remember all those times that you take profits and the market would have reversed on you. So as long as you're doing things consistently, it's great to take profits. I know I miss out on some trades that go in my favor, many pips, because I'm constantly taking profit. As long as you're comfortable with that and consistent with that, that's nothing wrong with it.
That's the trade-off we have to maintain that win rate, right? Because if you want to have that higher TP be hit more often, you're going to trade that with having a lower win rate, because you're going to miss, not all of the time it's going to go all the way there, and you will be losing in the process. And that's the trade-off. You trade not getting all those bigger wins, and you trade that against the fact that you will be taking more winners. You will have a winner high rate, and that's what you've been experimenting with, Jonathan, with having taking profit, and even if it's less than what you risk, because you're doing it more often, it compensates for the fact that you're not getting a big slice of the pie. You're just getting a small slice, but you're getting it very often and consistently, and in the end you're actually could be, and you're seeing that you are more profitable, aren't you?
Yeah, absolutely.
So there's something I think very well. I think there's more level to it, of course, than what you showed us. You mentioned that you choose dollar yen today because of a number of arguments. One of them was that there is volatility in the market, and the other one, I don't remember quite frankly what you mentioned. The other one was that I think euro isn't really moving the way you expected. But what questions do you ask? Because I think that's a skill in its own, to choose the right pair for the day.
Yep.
What question do you ask yourself that helps you decide which pair should I trade? Because I think that's, for everyone who is trading more than one pair, it's a very relevant question, to know what question should I ask myself? How should I let that decision be guided so that I choose the right one for this moment in time?
Pull up your chart. Sorry for interrupting, but I'm just going to pull up your chart in case there's something you want to show here.
Yeah, I think when you, depending on what you're looking to accomplish on your session, but for me, when I'm scalping, I want to get income from that, from that session. I don't want to I have my long-term strategies and I buy my stocks and I forget about them. But when I'm scalping, I want to make a return on my session. So for that, I need a couple of things. So first, the volatility to be there, because I know there will be, it will be, the market is going up and down multiple times, fast enough, in both directions. So I know I can get multiple opportunities to make money. So volatility or speed, volatility or volume. The second, that the levels, market is trading around or close to key levels, because in those levels, as discussed previously, is where the setups are and where the opportunities are and the big reactions in the markets are. So I think those two points are crucial. Now, just to explain why I didn't choose the euro USD, if I'm or pound dollars, they're trading similarly. So when I opened my charts in the morning, I saw the dailies on euro dollar, and I said, okay, this is great. Okay, if there's nice volatility behind these movements, I'm all in to go, I don't know, let's say long. Okay, we're a bit overextended, but I will be looking for pullbacks on this market and then opportunities to go long. But then you zoom in and you see the weakness, and we discussed this, the very small bars. We discussed in previous sessions to identify between strong movements and weak movements, and how long it's taking the market to go from certain point to certain point. And we see, once we zoom in on the euro, to the hourly chart, we see it's taken a lot of time to the market to go from point A to point B, and there's not a lot of large candles. So that's why I say, okay, I'm going to be in this session, I'm going to be trapped, and I'm going to be stuck a lot of time just to managing to take some pips of the markets, because other than these last impulses here, there's nothing here. There's 5 pips between pivot high and pivot low. But if we go to the dollar yen, we can see there's 10 pips from pivot high to pivot low, 12 pips or 20 pips. So there's more volatility here, and there's more. You can see there's small impulses on the hourlies. There's more strong movements and directional movements. So for me, dollar yen makes more sense than euro dollar or pound dollar to these sessions, because I want volatility and key zones, key levels.
I really like that. I like the fact that you're just looking at the market structure, just looking at price action here and trying to get an understanding of the feel for the market and the behavior of the trends. I think I like this because it's just pure technical analysis without all the fluff, all the indicators, all the systems, all the names, everything. It's just, okay, so what is price actually doing? And then just getting a feeling for that. I like it because technical analysis, again, every time I bring you on, it's like, it doesn't have. I always say this. I look at the way you're trading, and it doesn't have to be complicated. It's just, but I think what goes into this is over 10 years of experience. So I guess in a sense it is complicated because we've had to spend many years being able to have that feeling when looking at price action.
Yeah, after many years, it just becomes kind of natural.
Yeah.
You mentioned something, I think, very key. You mentioned one of the first things you look for is volatility. And that makes a lot of sense. That's completely logical. How do you see the volatility? I mean, concretely, do you measure the swing points that you just mentioned? You see how far these swings are, or do you look at the range it has done in the session already or the previous session? Or how do you what do you do to see if something is more volatile than the other one?
So I remember in the past I used to use the average true range indicator, and then I would help myself for that. But in essence, what I'm looking to do is to go from key level to key level, right? So I'm going to go. I'm trying to catch the movement between pivot highs and pivot lows. So I need to measure how long and how fast and how large is that range. So if I start measuring these ranges, because that's what I'm going to be able to catch, so I can see
on my side, the visuals have. We're back. Jonathan, we don't hear you.
Yeah, I think that's on your side, Victor. I think you're lagging a bit because we had a little issue with lag there in the beginning as well. So I think it's on your side, unfortunately.
So the only thing I need to do is to measure how many pips are from pivot from pivot high to pivot low. So you can see it's 10 or so pips, and that's enough because I'm going to be trying to catch 3, 4, 5. So I'm aiming to get a third up to half of the movement. I'll never get into the very, very top of the movement and get out of the very bottom of the movement. So if I can get a third or a half of that movement of the range, I'm happy with that. So if these are being 10 pips ranges on the 1 minute chart, that's golden.
I see. So basically, you're looking at the swings that the market does on the 1 minute, right?
Yeah, on the 1 minute chart.
On the 1 minute, and you measure if that is enough for you to catch the if that move is thinking that you're only going to catch maybe half of that move, if that should be enough for you. Okay, I understand. That's pretty clear.
And the range is happening, within a couple of bars, because if it's moving the 10 pips, but it's taking 20 minutes, so I'm not interested in that. But it's just taking a couple of minutes to move those 10 pips, then that's where the opportunity is.
So basically, the impulsive move, you're measuring the swings when it's impulsive, doing it impulsively.
Yeah.
Okay. Great stuff. All right. Let's see.
It's very similar to the way I'm trading. It's basically, we look at key levels, and I think that's yeah, exactly. Take notes, they're saying in the comments, and it's exactly what I'm doing here, because again, we've I've started this challenge here with Scalping on EU here with the new evaluation, bootcamp evaluation, and one of the reasons why I started doing this was, I've seen you trade here, Saul, and to me it just makes perfect sense. What you're saying is really resonates, and it's so simple, and I completely understand what you're saying. You're looking at a level where price has clearly reacted, as resistance, for example, and then price comes up to that level again and shows a reaction. Well, of course, you want to sell that area. It's you want to sell resistance, you want to buy support. So I'm trying to just take price from resistance to support. I think we have a lot of questions. Maybe we could go through one of the questions here for Saul, because I do see that we have quite a few. Maybe you can select one, Victor, if you have one.
Let's see. There was one question.
Where's Alex? This is good. Where's Alex? Well, he's like I said yesterday. He's either in Europe or Africa on a bike. We don't know what continent, but somewhere out there on his bike, taking a few breaks, checking MetaTrader, living the life.
Yeah, I think it's in Europe. He's just doing a bike trip.
I think in every live stream we have at least 2 to 3 viewers asking for Alex, at least.
Yeah.
All right. So one of the questions. Yeah, go ahead.
No, go ahead. Let's do a question.
I think there is one here that's quite I think it's relevant, and it's very useful for everyone to hear your answer. So when do you trade against the major trend? And could you define that? What is a major trend to you? What time frame does and how do you define a trend to begin with, and on what time frame? And if you go against that trend, what is the risk that you take in that scenario when you go against a major trend? So a counter trend. When you're trading a counter trend, do you adjust your risk, and what risk do you take in relation to your normal risk?
Yeah, I never have a simple answer for this kind of questions. The thing is, I think each trader look at the market, and he will see different things. Okay, I don't think the way I define trend is similar to how most of the people define trends, and I don't think there are a lot of trends in the Forex market. The Forex market is by nature made to not being trending. Okay, you don't want your currency value being changing 10% a day. So of course, if you go to lower time frames, you kind of see impulses and channels and what it looks like trends. But if you try to get the daily trend or the monthly trend, it's very hard to get, right? If you go to the dailies, it's hard to tell this is a trend. It's a very sideways market, and that's the nature of the Forex market. So the best you can do is not to try to get a trend, but to try to get a bias, which is slightly similar. It's where the current impulse or the current flow of money in what direction is going, but it doesn't make that a trend. It just makes it kind of a bias or a momentum. So once I get that, I usually get that bias or the momentum from the dailies, and I try to align myself to the daily bias. I hope I'm not confusing people here, but sometimes that daily bias might be against a major trend. Okay, you can have a very strong daily movement within a very large trend. So okay, I'll start again. Just stick to the bias. I try to stick to the bias, and if I'm going counter trend, counter bias, I just take that into account, because I know the big money is going to be kind of against me. So I try to reduce the risk I'm taking. So if in a normal setup I aim to risk, or my maximal risk will be, let's say, 1% of my portfolio. If I'm going against the bias, then I'll go maybe half or a third of my risk, of my normal risk. So one of my parameters to define a plus setup is going with the bias. So if I'm going with the bias and with the levels and the setup and everything's in place, I will go very, very aggressive. And if I'm going against my bias, then I'll reduce my risk. So that's kind of the guidelines.
So basically, you distinguish between a trend and the bias. The bias doesn't have to be necessarily the trend. The trend can be in any direction, but the bias to you is based on the fact that where's the momentum, where's the flow, where's the power at this moment, not on back all many bars that describe a trend.
Absolutely.
And you take the bias, and that's the direction you prefer to trade with your full risk. And if you're trading against that bias, which you do, you take half or 1/3 of the risk that you would. Less risk in any case. Okay, that makes a lot of sense, because basically you value the opportunities with the bias to be better, basically, right? You allow them to you risk more because you think they are superior setups than against the bias. But even then, you still think that going against the bias can and is profitable for you, because you've been doing it. So you go with and without against the bias. Very nice.
Correct.
All right, so let's see. Do we have some more questions?
Can I just show you a trade I have here on EU? And right before,
absolutely.
I'm just going to switch screen here now. It's obviously moving against me, but I got on the 5 minute here. This is we do have some strong movements to the upside, though, and I feel like I'm trading against the overall trend there, so I'm probably going to get stopped up. But the whole idea is, you saw we got the obviously looked much better before we had that breakout. So on the 1 minute we had a rejection here in this area. So on the 5 minute we have a clear level, and so I decided to basically short this level right here down to where we had this consolidation right here on the 1 minute. So I'm thinking we'll get a retrace basically down to that level right there, and that's what I'm trading here. So we'll see what happens. It's again I've stopped caring. Like, what's interesting here is I've stopped caring about the risk to reward. Basically, I'm just looking at levels, which is that's something I've started experimenting with in the beginning of this year, because I started seeing a lot of people talk about how they're not trading risk to reward. They're just trading level to level. And then I thought about that, and it's, of course that makes sense, but you need to have a profitable risk to reward as well. But what I've seen is, if you're just trading from one level to the next level, you'll have a fairly high win rate, and at times the average R of your setups will be so high anyway. With that with that win rate, it kind of evens itself out. So I found that I don't really have to calculate the average R much, but as long as I'm just taking the trade from one level to the very next level, the win rate is usually 70 or 80%, which allows for a fairly low risk to reward. Yeah, that's the trade I'm in. Obviously not looking great now, but it's still following the structure of we've seen the exact same thing here. So we might as well see a rejection. We don't know. What we do know, however, is shorting resistance is more profitable than shorting support, and that's the whole idea here.
Yeah, for sure. Yeah, we see indeed. If I may put my screen on, where the exact area that you're looking at it from, I think the 1 minute you were looking at it. What I see is that market has been playing with these two structures over and over again, right? So you see it going down, going up, and then I'm not sure which direction it went in that candle, but it is touching each side of that, even though they're not at the same time frame. One is on the H4 and the other one is on the H1, but they are still doing that ping pong between the two levels, which is actually very good for, I think, many traders. I mean, myself, that's since I do trade from levels to level, not the very next level, but it is the very next on a certain time frame, just not on the lower time frame, and that's where we have. And the question, of course, is, and I think this is the question of the day, perhaps even of the week. We have been having, what kind of structures have we been having? We've been having impulsive move to the upside. If you consider what we have been seeing last couple of sessions, right? Price moving basically up, right? There's a little consolidation here, but here's the first, you could say, consolidation, and then it moves out, another impulse. There's another consolidation, and then it moves out. And we're currently in another consolidation again. And the question is, will it continue the same pattern? Will we see a breakout and an impulsive move? Or will it start doing, not executing or not following the same pattern or not? So I think that's the question to be relevant, because if it does, then of course we need to be we need to be long, either scalping or holding this for longer. And if it's failing this breakout, that could be the first sign that maybe this time around it is. And if it does that, it would be doing it, as you can see on the shades to the left. It would be doing it at a relevant higher time frame relevant area, which is on the H4 and the daily. So I'm very keen on looking how it does, but just looking at market structure, or how it has been going impulsive, consolidating impulsive, and not retracing. It didn't do this. I was expecting this to get an entry. It didn't do that, and so still it didn't do this either. It's not. It doesn't need to retrace into demand area to just consolidate and impulsively moving forward. That tells me that it's likely to continue doing that until it shows us otherwise. And that's where the direction that I would like to follow. To me, that's the equivalent of what Saul mentioned, the bias. That's my bias. That's where I want to, that's to me, that's the indication that who is in control, and, where the power is, where the momentum is, and it's on to the upside. This is, of course, the hourly, so it doesn't necessarily mean that as a scalper you can be shorting this. That's another time frame. So you can perfectly short this on another time frame. But on the hourly, that's the movement we have been seeing. This is since Friday, so in a couple of sessions already. So that's what I'm looking for. Even though on the higher time frames, I am keen to see how the market will be reacting to this area, right? So we have, to the left, we do have a previous high, and it's likely that the price, if you think in broader terms, in higher time frame, it's likely that the price will, try to test this, either fake out or actually break it out, and we'll see what, to the degree it breaks or not, or reacts and behaves at this area. We can get an idea: is this going to continue, or are we seeing reversal pattern on the lower time frames, which would mean probably we'll have some kind of retracement, who knows, into some relevant area below us. All right.
I'm also looking at that
in
level.
The meantime, what we see on pound is, well, it's on EU, or
yeah, I think there's a lag.
You mean this
Victor,
higher, this 1 hour
with me and you.
Okay. All right.
Let's do it. Let's do a question for Saul before we completely confuse everyone. Saul, you're hearing that as well. There's a lag, like
I
right?
hear you both good. I don't know. I'm not experiencing the lag.
Okay, I think there's just a lag between me and Victor.
Yep.
Okay, so I wanted to ask you a question. When you scalp like that, do you ever take partial profits, or do you just close? Like, do you enter many positions and then you exit one position at a time, right? Because I've never really seen you take partial profits of a specific position.
Yeah. Most traders are taking partial profits and full losses. We used to think of the partial profit technique as a good thing to bank profits and protect your profits. But then when it comes to the losing side of the trades, they're taking full losses. So, and most traders are losing money. Are not making money. So, at some point, I decided I would do the opposite. I try when a position is going against me, I do take partial losses, but I try to take as many full profits as I can.
That's awesome.
Also the fact that I'm managing my setup or my position with multiple small entries, that allows me, the flexibility to take the full profits. But I do take many of those at break even because I adjust the position and so on. But I try to take the full losses. The trading is bit fast, so I'm not wasting time on the partial profit technique. I'm just taking the full profits as much as I can. But if a trade is going against me, then I do try to take the partial loss. I'm sorry, guys. I'm just managing a trade, so I'm not super concentrated.
I think that's a very good idea, and I think that's something a lot of people should think about, because we always hear things like pay yourself if you're free in profits, pay yourself, take partials, let the rest run. But you never hear like, oh, if you're in the loss, sell half of that, or sell half and let the loser run. There's something like that. Like, you never hear that. Now, of course, you let the loser run, but you let it
bank
run.
Bank losses.
You never hear that. But I think a lot of successful trading is not only about changing our beliefs of what we've been taught in like in school or whatever, because successful trading is a lot about changing the way we think. But when it comes to comparing ourselves with the typical trader, and then us as professional traders, I remember that I had a specific mindset going into trading when I started, and I have a much different mindset now as I did when I started. And that was because learning things like this, you have to because I'm doing the same. When I'm trading, I have a very wide stop loss, and that's because if anything unforeseen happens, if there's a huge move against me, I have a set stop loss. I can only risk a certain percent. But if the trade is not going in my direction, there's no reason for me to be in the trade. So what we have to do is I really think we have to be impatient with our losers, just as impatient we are with our winners. Like, a lot of people say, you're going to be impatient with your losers and patient with your winners. I think we should be impatient with both,
Absolutely.
It's just, just take profits when you can, and cut the trade if you feel like it's moving against you,
Absolutely.
That makes no, go ahead, Victor.
That makes a lot of sense. And that goes to show that what looks logical and sounds and feels logical doesn't need to be the best thing in trading. A lot of things are counter intuitive, right? It goes against what a common sense would dictate. And what is common sense? Common sense is based on your previous experience, but that may not be applicable in this arena. And so, relying on common sense is not a sure way to be on the right side of things in trading.
Absolutely.
No, go ahead, Saul.
No, sorry guys, I just managed to take profit. I was on the water on a trade, and I just
Nice. Can you? All right, let's take a look at that. Let's take a look at that.
Let me
walk us through what happened there.
Yeah. So, okay, I had two small setups. Well, so let me show you both. So first, I was.
I love that. That's just arrows all over the place. This is 1 minute we're watching, you know. So sometimes the daily looks like this, but it's rarely you have a 1 minute chart looking like that.
So let me hide that for a second. So we had this, this break, and it kind of held. So I was looking for the market to retest the breaking area, and then I would be looking to short it. So I was looking for the market at this point to come up so I could short. So I bought one time, and this is the blue arrow you can see here, and it started going against me. So it came all the way down to the next demand area. So as it approaches the demand area, I kept buying. So I bought 1, 2, 3. The reaction finally came. So once it all came to my first entry area, so I had one slightly losing trade, break-even trade, or slightly positive trade. Those two took off one each other, and then 2 positive trades. And then, we were approaching this selling area, this one right there. So I started building short positions now. So I took 1, 2, 3 trades, which are the red lines you can see there, and I closed them all here at the blue lines at these ticks. So I had the win on the buy, and then the win on the short, and now we're at the next selling area. I could be I could consider taking a new short position around this selling area. But yeah.
Go ahead. Sorry.
No, but bottom line, I started buying here. I added to my position here. I closed everything there for a win, and then I started shorting, which is the original setup I was looking for. So I took 1, 2, 3 short trades, and I took them here for a profit as well.
That's so impressive. I mean, it's just so. That's something I really need to understand how to apply to my own trading, because I look at one area and I decide I'm gonna enter one position here, and then you kind of scale in, and then you scale out, and you take a trade to pay for another trade, which is that to me, I think it requires a level of you need to know exactly what you're doing, and you need to be rather calm doing it, because just watching this, just looking at the way you described it, it kind of makes me a little bit stressed. Just imagining myself being in that scenario, oh, I'm down on this one, so I'll average into this loser 2 more times, and then I'll close the lower one at the top to pay for the other ones, and then I'll short immediately, and it's in the span of 10 minutes, you have 6 trades. So that to me is just crazy.
Yeah, I agree. And also, it requires a lot of focus, and that's what I wasn't paying a lot of attention. And also, it's not a very effective way of trading. You pay a lot of commissions each time you click the mouse. But
yeah, that's something I've noticed now on my evaluation account here.
And you described well. You need to feel comfortable on those drawdown phases. I saw this impulse to the downside, and I said, okay, if this level doesn't hold, where's the market potentially stopping again, which is all the way back to this level down here. So if that level hasn't held, I would have either to close the trade or holding my trades for a loss for another 12 pips, which is a lot. So you need to be very clear on what's your trade plan for each setup. Where are you adding more, and where are you just taking the loss?
Yeah, That's the thing. Like you need to have a specific plan. I think that's what you showed us. It feels like you have. It feels like to me there's multiple plans, but maybe you only really have one plan. I don't know. Like to me, it's confusing because, and maybe this is why I'm not scalping, But it feels like you have multiple plans and multiple scenarios at the same time. Like if this scenario plays out, that's plan B, and that's plan A.
Yep. Yep.
Yeah.
I got a couple of questions. I think what you just saw, I think, is the master skill you have in the market, or at least the execution, the way you trade is another level than what is typical we see other traders do. One of the things I saw that I think I want to touch on. One is the first question is, when you're averaging into a position, you open multiple trades as it is going against you. Is that always the case, or will you be adding to the winners as well?
Yeah, most of the cases I'm averaging my losing, because I'm trying to get more refined in my entry point, and usually I take profits, so I don't manage to have the time to add into my winning position. But if there's some rare days where there's very clear trends in this case, and when I'm running a trade, then I'm comfortable adding into my winnings as well. But that's something that doesn't happen a lot. I add much more to my losing trades than to my winning trades.
Yeah. All right. So that's one thing. How do you, because you are averaging in, you now, after, let's say, on the second, when you have multiple trades on the same idea, you basically have a basket of trades, right? It's not one trade, but you have multiple trades. How do you assess where the break even is? Because you will have a break even that will keep on moving. How do you know where's the break even, so that you can, if you close it, it's going to be a profitable trade, a basket? And if where's the break even line? Because do you only use the P&L on the terminal, or do you have some other ways to do that?
Yeah, so this is something that's a great question, and that's something that if you apply this technique on a netting account, for example, like on a stocks account or something like that, you don't get multiple entries. You get just only one entry that moves with you, and then what's your average, what's your break even level. In these accounts, the Forex account that are hedge accounts, and you see each trade as a different trade, it's different entry or order. Sometimes it gets overwhelming, but just looking at the P&L, you kind of see, you kind of know where's your break even, because I started adding here and then I added more here, so and here at the bottom I added more positions than the one I had in the top, so like somewhere between the mid-range and below of that's going to be like the break-even area. So above that level, you will be in the profit. So with some practice, you get, you develop that break-even sense. But if not, you can always watch the P&L and get it from there.
Now, the other thing, the other component of the basket is: are you taking fixed lot size entries?
Yeah, so I usually try to take multiples of one. So one mini lot or one lot or 10 lots. Because I try to look at my profit. My profit is set as, we can't see it here, but it's set as points or pips, and as points. So that's how I can keep measuring myself in terms of points, and I don't get distracted by the size of the trade, of the loss or the win. But I know I need to get an X amount of pips, and I don't get distracted with the size of it if it was on P&L, on balance.
I understand. All right. So what you mentioned there is you take a multiple of one. Does that mean that you take one trade, maybe one lot, and maybe on the third one you take two instead of one?
Yeah, but 2 orders of one lot.
Okay, so you stick with a fixed lot size.
Correct.
Okay. And basically what you then do is you look visually for where the average would be.
Mm-hmm.
You take the range and you know more or less if you took. Okay, that's great stuff. And the other thing I think very curious, first time I saw this right now, I noticed that the distance between the first basket long, the distance in between the intervals is larger than the second, the short basket.
Mm-hmm.
Is how do you know how big the distance needs to be? It does it have to do with the width of the area? If it's a tighter area, you need to build in more quicker, or does it have to do with something else like momentum, or maybe I don't know? Does it have to do with something else?
Yeah. So remember, market usually goes from key level to key level. So if my first entry, I hope if I understood your question right. So if my first long entry was here,
Yes.
there's no much point on adding between here and the next level, which is down here. So in between, the market will run kind of freely. So I add here and I wait for the next key level to add my second, basket of trades. In between, there's no much point of adding. So then I add here, and then I wait for the market to get close to to the next key level to add again.
So basically, the distance is not something fixed. It's just based on the levels.
On the levels.
I see. So, correct. And we see the shorts that you open later. The second basket, you had three or four different trades there. They were very close to each other, very tight, and that's because of price action, or is that the levels you just mentioned where you see different levels there and you enter them?
Yeah, basically because my selling level was this, something like that. So at the bottom of it, as price was approaching this level, mm-hmm. I sell once, but then as it went up within the level, and then I kept reading price action. I saw how this candle was smaller than the previous one, and this candle here was a bearish candle, and there was signs of momentum to the downside. Then I added more and quicker. So
I understand. Yeah. So basically, you're reading momentum there. You're reading the smaller candle, so loss of momentum, and then the reversal, right? The bearish candle, the reversal of that momentum, and then correct. So that makes you hit it harder and faster in comparison to the other one. Great correct. Stuff. Mm-hmm. Wow, very insightful. I am very insightful everything you just showed there, because I think that's
that. Yeah, go on.
I think that's the purest form of what I think of a trader, where you are connected with the price, no indicator, and you're connected with every movement, every characteristic of the bars, how fast it does anything, what the range of each bar is, and you read that's the tape reading. You're reading it as it's happening, and you're reacting almost instantaneously to it.
Yeah, I'm always kind of afraid that we make this conversation might turn a bit advanced, and I don't know who's watching, and might become a bit overwhelming. But yeah, that's kind of what I'm looking for. The key levels and the price action and the momentum and all the components of the market. And then I try to be like planning ahead. If this goes wrong, what do I do? If this goes in my favor, what do I do? The A plan, B plan. So in this case, I have this level mark. So I see while we're speaking, we see the momentum coming into the market to the bearish side, which is my bias for the day. So this candle and this strong candle. So anticipate now. Okay, I'm saying the market will go to this level. That level might give us the reaction, which in a form of a pullback, something similar like this, and would be a great opportunity to sell again if we get that. We might try to sell again, and always asking you, okay, what's next? if you sell here and that breaks, what you do? You close, you add. Where do you do that? So yeah, that's kind of the process, the thinking process.
Yeah,
I think we do. Just to go back to what you mentioned here, not to try to make the discussions too advanced. I mean, we do. I do think we have quite a few advanced traders on here. But you mentioned, like, it's a good point, because I feel like a lot of the things you talk about, when you go more into like the advanced, trying to explain the way you're thinking in a more advanced way, I think that comes with experience as well. So, sticking to the basic things, I think, is very important as well, because the more advanced stuff, I think that's something that people will learn while they're trading. That they need a few years in the markets to actually understand how they're supposed to be approaching that. I think most people do it differently based on their level of experience.
Yep.
Yeah,
But
I
for
wasn't.
one, really do appreciate when we really do go into the
No,
details of things. I think that's great.
I enjoyed it a lot. I don't know, maybe the audience can see that. I'm how do you say that in English? I'm savoring the experience of asking you all these questions. And sometimes I think you're making a point. I sometimes forget that it doesn't make all the time sense for everyone in the audience, and so we need to cater for all of the different levels of experience of the audience, and not losing digging too deep and too specifically only into those things. I think it's a great point. And wow, great. In the meantime,
let me, like, we see USDJPY is dropping completely there. Are you looking, would you?
What's
You're
my
not
plan?
long in that. You didn't.
No, I'm not long, but look at how precise, the area, the demand area, the reaction is happening right at the demand area we marked prior. So I'm not now waiting for a market to approach the selling area up here, and I'll keep watching how it approaches that area. So if it gets to that area and starts slowing down, I'll be shorting. So that's my next setup.
Nice. All right, Saul. It's been an hour, and I know you're quite busy.
Yep.
So we're probably gonna have to let you go, right?
Yeah, but let's meet again next week.
Yeah, let's do it. We'll plan in a session next week again, and we'll do one of these live trading session again. I know for one, I'm going to be watching the replay here, and I'm going to try to see if I can apply some of the things you've talked about here. I still have to learn how to like scale in and scale out, which is yeah, you know what? Honestly, after this evaluation program, either if it's a winner or a loser, I think I'm just going to go. I think I'm going to be one of those break-even traders just forever. It feels like it's just up and down, up and down. I don't know how long this will take, but I have a feeling that after this, I'm just going to be okay. I'm never going to scalp again.
Yeah, that would be wise.
Yeah, probably. But yeah, it's great having you on, man, and we'll. If we can do some more questions next time as well.
Yeah.
Guys, if there's something, if you feel like you had a question that we did not ask today, make sure that you we will make sure to bring it up next week when Saul is back on. Anything else, Saul, before we take that break?
No, always glad to be here, guys. Thank you for the invitation, and thank you guys for joining. See you next time.
Awesome. All right, guys, hit that like, show Saul some appreciation here. Hit the like, and we'll take a 10-minute break, and we will be back right after this break. All right, take care.
Bye, guys.
Bye.
All right, we are back. Let's see. I'm gonna switch over to TradingView. Update you guys on some of the swing trades I've been looking at. So I closed yesterday. I had a short on Euro CHF, and very simple trade. This one, you have a daily. Let's see if the indicator can load. So I actually traded this based on the levels from the indicators. You have a level right here. See that blue line right here, and then you have a clear rejection here on that level, and then one level below, and then on the 4-hour you had a you can look at this as, you know, that uptrend again, like we talked about, you know, that break of structure pattern where you have that uptrend, kind of goes like this, forms a range at resistance, and then breaks down. And when you had the close of that 4-hour candle is when I entered, and then I decided to take profit at this level right here. So I'm front running that support level a little bit. So that one closed as a win overnight, and then I closed GBP JPY trade in a small profit as well, and now I'm in this GBP NCD trade, and I've limited my stop loss here. I moved my stop loss up here when price started kind of moving in my direction and confirming that the idea was valid. So I'm just looking for a very, very small move here, and we can look at the change of structure here on the 15-minute as well on GBP CHF. No, GBP NCD. It's same thing here. You have basically a downtrend here with overall lower highs and lower lows, and same thing here. This is part of that trend, right? And then you have that break to the upside, and now it starts to form kind of like this structure here. I think it's somewhat visible on the 1-hour as well. Yeah, on the 1-hour as well, you have that down move, and you're kind of creating a trend that looks something like this, and we might see a move down here.
That's the pound
just
Kiwi, right?
Yeah, exactly. That's
Because,
what. So this is the trades, and these are all actually all the plans that I have this week. I've taken all you know, I've taken all the trades this week that I've been looking at, so I don't really have any more plans to trade this week. And I've also felt that this week I've started getting a feeling that I'm not having the best read on price action. So it's had that feeling when I pull up the charts, I do my weekly planning, and I look at the markets. I have this feeling of not confused, but like I don't. There's nothing that's super clear. So, and because I don't have any trades to plan, I'm not going to be taking any more trades this week, most likely, because usually when I feel like this, it's good to take a break, you know. So taking a break all the way to Monday is I don't feel like I'm missing out. It's more about, like Saul said, you know, it's not about missing out. It's about protecting what you have. You're not really missing out on any positions if you take a break, and you instead of losing money, you're not losing or making any money, you know.
that's just has the same effect as winning money on your bottom line, right? When you're not losing, when you avoid a
Yeah,
loss, it's
exactly.
the same as you gain a winner. So that's why it's as important to be able to identify in your trades, in your data, any filter that can help you eliminate a couple of losses. Because if you do that, it's the same as increasing the winners in your trade history. But I was looking at your at a peer that you mentioned, and I just, since this is not a pair I typically look at, but if I may, this is the area. This is what you were showing a couple of minutes ago. I think you were seeing it from, was it from the 2 hours? I think you were seeing it. I'm not sure. I think
I
you were
never look at the
seeing it.
2 hours. For me, it's always it's either 4-hour or 1 hour. So I'm not looking at the 2 hour.
Okay. Anyways, but yes, I saw this, and I see a quasi, of course, and then I go to see, is this something are there more reasons for why this could be a great reversal? Because I already see, I mean, with your chart that I see it much smaller than the actual chart, because of the windows we're at Harvard, but only on the visually, just by glimpsing at it, I already recognize what I need to see in a market to make it interesting to me. And of course, what I mean is I see these from afar, from a mile afar. I saw that this exactly what you mentioned. You can even show it like this, and where you have a break of structure either here or there, depending on what time frame you are. But it's very obvious to the naked eye that we are now starting a new structure, right? It's not no longer making lower lows and lower highs, and that's the definition of a break in the structure. So when I saw that, I say, okay, let's go look to see what is there to be found. And if I start from the higher time frame, I didn't even look at a weekly, but what do I see? I see a fresh order block, right, that caused a impulsive move up, right, and prices coming right into it. That's where the area where you have that break of structure. So it's very relevant on a daily time frame that is making that reversal, seems to be making a reversal from this area. Then I go to the 4 hourly. What do I see? I see a where the buyers to control, right? So there is a fresh order block on the H4 formed there. And if I keep on zooming in, I keep on, well, actually, I didn't see this because there was just a couple of seconds I was looking into it. Of course, you can see that order block being respected neatly, right? That on the H4. I don't trade. This is something that let me see, that I wouldn't have traded because it's not the, it doesn't comply with my selective criteria for a valid quasi, but still it is an H4, and price comes in, reacts the first time around very nicely on that first upper border of it. We've been showing that on our live stream. A lot of the times price comes back and has a very, very, very precise reaction to a structure, right? And those are the signs to me that, it is something. There is something there. The structure is being respected. There are buyers sitting there. Either that be, they're clicking right then, or they have pending order. It doesn't matter, but they're coming to the market at these levels. So this is relevant. When it does it the second time around, it tells me, it confirms the first one. And the fact that this, of course, you can only say this after the fact, but when this bar closes, that is the area of control where that was interesting for the buyers to come in. So now I have daily telling me this is a great area. The structure on the H4 also already depicted to me where the area of value is for me. And if I go to the H2, which is one of the time frames I use, I can spot a structure that does. This is a bullish bar, right? So it went. It ended up. This is the high after that low, right? And then you have this structure. This is the highest time frame where I can find a valid, according to my personal rules, a valid quasi, right? If I go higher, I don't see that quasi. So this is an an H2 quasi. And if I do that, then this area, which further refines the bigger H4 order block, this is the area that I would like to be looking for price when it comes back. If we don't know that, I'm not a predictor. If it comes back, that's the area, that's the sweet spot that I want to be getting in. So this is on the H2. So this is still a quite some area. It's about 23 pips, but it's quite nicely. If you're able to take this, remember, we started top down. So if it makes sense and you can get a entry on the lower time frame, you're actually getting a trade that is valid not only on the minutes, the 5, the 15, whatever time frame you got in, but it makes sense on the H2. It makes sense on the H4. And it also makes sense on the daily. That is the ingredient that I need to hold the trade for longer than just intraday. Something that is completely aligned on the higher time frame. It makes sense all the way. So if that happens, then I can hold this and make this a huge trade, which this is the kind of trade that I get excited on. And I think you can hear that in my voice. If I can get in with a tight area, This is pound Kiwi, so it's not going to be as tight on euro dollar. It's not going to be 1 point something pip or 2 point something. It's probably going to be a couple of pips because only the spread is already much wider.
What's the stop loss right there on that setup?
Well, I don't. This is just a hypothetical. I don't have an entry yet, so I don't have a stop loss. But I would assume if I have an entry, typical my entry on the euro dollar and the pound dollar, I would have anywhere between 12 pips. Rarely happens, but I do have some kind of some trades in my trades that are like that. But most of them are closer to around 4 pips, and a lot of the times much tighter, 1 point something, 2 point something. And so if that's not going to be possible with pound Kiwi, right? Because of the spread, because of volatility, because of ranges of it's a different pair. So I can't assume that they're going to have that kind of actually I already know I'm not going to have that kind of that kind of a stop, but it's going to be maybe double the EU. If that is the case, and it's going to be around maybe 6 pip, maybe 7 pips, maybe 10. Make it 10. I have 10 right here. That is just an estimation because I don't have anything yet. It's not a signal yet. But if you have this on the lower time frame, let's say you got it on the 5 minute, the 15, whatever your trigger was, and it shoots up very violently, very let me see, let me put this at 10, and it shoots up very
I mean, I just want
impulsively.
to say that it's interesting because that stop loss that you put right there,
Yes.
that's where I have my stop loss right now.
Okay, well, that's I put it because my entry should, that's not exactly correct. The entry would be within that something that happened within those two horizontal yellow lines, and I know that is the structure that I'm trading off on the H2. So most likely I'm going to have my stop below that structure. So this particular level, I don't know yet. It's just randomly put there. But I mean, it's not random, of course, but the level is based on the fact that, that's the lower end of that order block on the H2. And it could be a little bit lower, it could be a little higher. That depends on the price action as the signal comes in. But so what I was trying to say was that on the minutes you're getting in on the tightest entry possible, and if let's say at the end of the day it doesn't do anything, it just goes sideways, I'm not gonna want to have this open for the rest of the week for another day, right? Because it didn't do what it's supposed to do. Because if I'm right, this area, as soon as price gets into this area, it should change completely its composure. Price order flow should change completely, and it should react violently, either to the downside and closing there, invalidating the structure, or maybe squeezing it, leaving a wick below, and then reacting violently to the other side. And if that happens, that's the market telling me, that the buyers that were supposed to get in based on everything I just said on the setup actually came in. And if it does that and it moves violently from this area, let's say to the end of the day, have some very big handles going up, that's the sign that I would be needing to hold it. And not only hold it, I will be looking, okay, is it, if it's also seeing, since I have an H4 order block there, right, an H4 structure, what is the relevant area? What is the next order block on the H4 that could stop this? And I see an outside bar, possible outside there. That's going to be one area of interest somewhere in there. And since it's also a daily structure, I could even extend it to something, to the left. What do we have to the left? We have an order block here, and that could be an area that I will be interested in. I didn't put it correctly, but it doesn't matter. That's the daily order block. So this is the relevant area, either this swing high or that order block on the daily that makes sense, right? So I'm going top down and then bottom up again with the what time frame, and the question I'm trying to ask is, which time frame is this playing out on? Is it playing out only on the minutes? Then there's no reason for me to extend it to the hourly. But if it is, then I have increasingly, if as the market is confirming me, I can ride this trade on all the way to at least that high, or maybe that low, that bound, and you can see how what that does to my to the trade. It makes it a trade that goes, hugely in your favor, and just imagine what this would do to your equity curve. So, but it's not something, yes, 34R, but it's not something that happens all the time. That's one thing. So this is not the this is not the trade that I take every day all the time. Doesn't happen like that. But the only way to be able to do this is to be ready, have that scenario ready, and as the market is confirming and showing you at the relevant higher time frame each time, you can start upgrading that trade to a higher time frame, and eventually all the way up to the daily relevant structure, which is this relevant structure right here, or either this structure, the order block, or perhaps the swing high, right? Because it's going to, or something in between. You don't have to go all the way in. You can go to 80%. Depending on your stats, you can look for other structures right there. It's perfectly fine. You're catching, biggest chunk of the movement, so you don't have to, eat up all the crumbs of the pie. You can have a big chunk and walk away and be a winner. But it's very interesting. I this is a pair I don't trade normally, but it doesn't matter. Price action is price action, and if this happens, and I may be even tempted to take it. I don't normally take these trades, but if I see it, why not? I will take it.
So with the entries you're talking about, what I find fascinating is, you're basically looking to enter at the lows again, right?
Yes. Not necessarily, but in this case, yes.
Because if price goes back to the lows, then for me that's not a setup. And that's the part of your system and your
Yes.
your way of trading that I'm not understanding. Because what I see is, I see that big bullish candle on the 4-hour. That's my confirmation to enter the trade. And even the retest of the 4-hour order block right there, like that confirms to me that, okay, I think we're gonna go higher.
You mean the immediate retest? That
Yeah, exactly. The immediate retest right there, which is also the highest of the previous bearish candle, right? Which is the order block, and price retest that area, and that's my entry. That's when I want to enter the trade, and I think the low is now created. I'm basically taking this trade based on the fact that I think that the low is not created, and if price comes back down to where you've marked out as possible entry on the H2, then that would not make me feel very confident in the whole idea.
Yeah, and the thing is that by having this area as the area of interest, I don't trade the setups that you take, which are the ones that don't come to this area. There are a lot of the times it doesn't come all the way to the extreme and test this order block, but that's fine. I don't touch those. I leave them for other traders like yourself. And so you're using the same movement, but you're taking a different set of a different pattern that plays out also, which I don't look at. And as the price is coming into this area, typically for you, that's a sign of, not great sign, but that's where I come in and I do, that's where I eat. That's where I hunt. And we're hunting the same prey, but in a different scenario, or a different habitat, if you will, right? But it's basically the same prey. We're trying to catch this move that is showing us a reversal. The only thing is that I don't trade all the reversal, right? Because this is already telling me that it could continue to go up. It has a momentum to it, and that's the one you want to be catching. And while I want it to go back and retest this as it is going up, I'm waiting for perhaps this kind of movement, and then moves out. And actually, let's see.
Just a quick comment there, Cash. If you do have anyone anyone specifically referring to, or anyone you're thinking about, just let us know. And we're always open to inviting more people, and we're gonna have some more guests on next week. But if there's anyone in particular you want us to invite on here, feel free to give us any recommendations. You can you know where to contact us for that.
To the case in point, right? This is the difference between, I think, your system and mine, Jonathan. Using the same chart. What does this tell us, you and I? This impulsive move, or maybe this candle. What this does mean? It means that the buyers took control, and the momentum is to the upside. We want to go long. We wait for a trigger to go long, but we want to go long because that's where the power is, as Saul said. The difference is that you would use a retest, perhaps this high or some other retest, as price comes back into it. Maybe this low could be your entry to capture this move, right? So you're trying to capture perhaps this move, maybe all the way, maybe up to this high, maybe looking for something to the left, and that's the trade you're looking for. Meanwhile, what I wait for price to do this. I identify the order block here, and I wait for price to come back all the way into that order block, and then I start looking. So we're trading the same momentum, but at a different, not necessarily at the same moment, but it's basically the same momentum that you are trying to catch, that was visible and obvious in this price action. You're trying to catch it here, and I'm trying to catch it at a different moment. But basically, we're trying to catch the same momentum and power that comes into the market, just at a different moment, at different scenarios in time. I think this is quite insightful as to different ways of trading, and there's no right or wrong way to go about, as long as you do it consistently and you know what you're doing, and you have data to support that which you trade. And of course, it means that I need to be very selective, because I think you're right. If price is very strong, it's not likely to come back here quickly. And if it does, and this is what happens when it comes back in those area, it will be very, very short-lived, that move, because it will go down and it will be bought up immensely, violently, and that's when I know that I've caught the fish. When you're fishing, you got something, and you to the force of, I'm not a fisherman, but to the force it reacts to the rod, right, to the line. You can have a sense of how big the fish is, how strong it is, what kind of fish it would be. When it comes to that area and it reacts violently and it starts showing those big candles after getting to my area, I know I got something big. And that's why I'm so fascinated asking Saul and hearing about him, because I see, although he's not using the same kind of things, exactly the same things in the market, but it's the same kind of thing. He's trying to put his ear on the ground to listen to what the market is telling, or putting his finger on to the wrist of the market, and listen to the pulse, or basically not listening, feeling the pulse. And I love that. And to me, that's the purest way of price action, technical trading, because you're right there on top of price, right there with every pulse of the price that it gives you.
Yeah, exactly. I
Differently,
mean,
but
that's the beautiful thing about, just, with technical analysis and just looking at price action. That's the beautiful thing when you're able to observe and just observe without a bias, and you're just listening to what the market is doing. And because I can remember, when I started trading, I had so many ideas on. So I started trading Bitcoin, and I had so many different ideas on why the price of Bitcoin should be going up. And I had different news articles, different tweets, and different setups by other traders, and different technical analysis I saw on Twitter. And like, I had so many reasons to believe that the price of Bitcoin should be going up. So I had a very, very clear bias. But now, when I'm looking at price action, that there's just no bias. Like, I'm gonna go wherever whatever price does, that's what I'm doing. Wherever price goes, that's where I'm going. And I think that's a and Saul does it so beautifully. Like, it just, and it feels like it just happens automatically. It's like sometimes he can't even describe what's happening, because it's just intuitively. And when something is truly intuitive, that's in my opinion at least, that's a creative thing. You're being like, when you're truly intuitive, you're tapping into that you're into that flow state of mind. And I think reaching a flow state of mind is part of like part of the same area of the brain, probably, that works with creativity, where you're like in a state of flow, in a state of creativity, and you can't every time logically explain why you're doing what you're doing. And I think that's also you know um yeah, I completely forget what I was saying, but I think I said most of the things that I wanted to say. Yeah, exactly. Saul has a sixth sense. It's definitely.
What I find so beautiful about the way he, his composure as he's trading, and the way that it seems to me, and I think that's a sign, that's a hint for us, for everyone, that he's detached from the direction, because he goes short and 2 minutes later he's long.
Yeah.
He has a TP, but then closes it on a wimp, right? On a just like that, and then reverses his position while talking to us. And that tells me that the only way to do that is to be detached. It doesn't matter. You're just reading it and you're acting just like what you're doing it, frictionless. You're trying to do it frictionless, and that's what the skills you're trying to build right there.
I wanted to show you guys this. So we talked about EU, and we're in this range right here, and I was trading this range, and here's a good example of how you can lose money on a good idea by overcomplicating things. Okay, so my idea was to short this area. Okay, my idea was to short resistance, like I always do. Short resistance, take profit at support. Now, this move played out exactly as I would have hoped that it played out. We even had the most beautiful 5-minute bearish outside bar right here. Okay, we come up right here. We have what I would say a fake out, and a very strong bearish outside bar right here. What I did here was I sold here, got stopped out here, and then I sold here again, and then I closed it here because it looked like it was going higher, and I went long here, and I got stopped out of that long here. Okay, if I just would have sticked with my if I would have just sticked with the original idea, that would have been wait for this strong candle to close. short on the close of that candle, stops above the wicks, and then TP somewhere down in this area. If I would have just done that, I would have had a winner. But instead, I, created ideas and plans on the go when in the position, and everything that I wanted to see played out perfectly. But instead of making money on that idea, I lost money because I executed very poorly. Now, one part of this experiment, which I feel is working very well, is I've already, I've done this for I've done it for 3 days now. I've taken 20 trades. And again, the goal here is to take many, many trades to, again, execute a lot of trades. And because that's something I'm not doing very often. I'm executing like 2 or 3 trades a week. But if I can, condition myself to just take minutes to execute on every single idea. I know there's just going to come times when I do mistakes like this, but with time, I feel like a lot of these mistakes I did up here was because I saw that, okay, this idea is going to get validated. I better close it. But what I should have done instead is zoom out, look at the overall idea, ask myself, is the idea still valid? Yes, then keep that trade open. So yeah, just like D. Smith says here, executing trades builds experience. And even though I have a lot of experience, I feel like I need to get rid of the fear of executing on the lower time frames. And what better way to do this than to do it in front of thousands of people live? Because there's a pressure on that. There's like, you gotta understand, like, people, if you're watching this, you gotta understand that everyone that comes on this live trading room, there's a certain pressure. There's a certain pressure to perform, to show that we're taking good trades, we're good traders, right? So by doing all of this publicly, there's added pressure. And if I can get rid of that pressure and the fear of taking a trade and just executing flawlessly, then that's going to help me a lot as a trader, and will be such a valuable learning experience as well. Now, what I talked about yesterday, like with EU, like we're seeing that ranging structure again. We're seeing the highs and the lows. They're so clear on the 5 minute. And if we just sell, it's so simple. Sell resistance and buy support. If we could have just done this every time, so the range is I would say that the range is confirmed here. Okay, so you have 1 test, 2 test, 1 test here, double bottom, sort of test here. So the range is confirmed here, right? So could have sold here. We have a bearish engulfing candle here as well, almost like an outside bar. We have a very bearish candle right here. So put entry here. We enter right there. Stop loss above the level. TP at these lows right here. Okay, so that went straight down, hit that TP. Another bullish engulfing candle. Enter on the close of the candle. Stops below the level. Right up to the next level. That's a winner. Next trade. Enter on the close of that outside bar. I'm just going to call it bearish engulfing. So that bearish engulfing, enter on the close of that one, stop loss about the wick, and TP at the lows. That's it. 100% win rate. Super, super simple. Why do we have to complicate things? And this is on EU here, and then we go back to what happened when we started this on, I believe, Monday. Same type of range. Sell here, buy here. Sell here, buy here. It's so incredibly simple in theory. Okay, so now here's the problem. This, I can't buy this because the wick is too big. Okay, the wick is simply too big. Now this tells me that there's a bit too much air down here. Okay, so for me, I need to see like a pin bar on the level, a bullish engulfing on the level, but this one is just, it's too big. So maybe we'll get another move down and then form a nice bullish engulfing candle, and that's when I would probably enter a new long on EU here. So I think that's what I want to focus on going forward. But I also want to yeah, the next buy can be it can be in not the close of this candle. It can potentially be next candle, but best if it's the next candle after that. So at 4 o'clock my time. So when when the 1 hour candle closes, we'll have this 5-minute candle closing, and now actually 5 minutes past that it needs to happen, because then that's the only time we can print a bullish engulfing candle in this area. We can, however, print a nice bullish pin bar on the next candle, and that might be a buy signal as well. And of course, this is on the 5 minute. If you go into the 1 minute, we want to look at how is price reacting to this level on the 1 minute, and it's pretty much the same thing here. You have a nice bullish reaction here, and here you have also that double bottom, right? And that bullish engulfing candle right there after a double bottom, that's a good signal. But also when you're kind of breaking out here and you see that you have a rounded bottom on the level, that could be a buy signal as well. And the next time we test that level, you see we have that could have been I would have been stopped out on that one, but that could have definitely been a long, but I would have been stopped out. But then this one right here, you have sort of like a double bottom on the 1 minute, and it ends with a bullish engulfing. That would have been a long. And the risk to reward of this is just, it's high. Yeah, it's pretty high. And like M76, man, you're on these live streams so often. You got to change your name so it's easier to pronounce. M76BB. I really appreciate you guys coming in. By the way, there's a lot of people in here that we got Harash, we got Ebel, we got Rascal, Henry, Alex, everyone in here. I do really appreciate you guys coming in. You're in here so often and giving a lot of value to us as well with these questions. But yeah, so confirmation that in swing trading.
Before you continue,
yeah,
there's something. Before you continue, there's something I want to show on the chart. The red line we see there, that's the pivot point for today. So that's another confluence that this area will be looked at by a lot of traders, and doesn't mean it's going to always reverse or always break, but it means that this will be the one area that a lot of traders will be watching, and it's very interesting what it does as it is reaching this area. And that could be an area of interest, and it already is because of the previous retest of this area, and also because I'm currently looking at this, and as you can see, I'm looking for, I do have a quasi on the 5 minute that makes sense to me. And these are all the different reasons, areas that I'm waiting to see what does price do when it gets to this area. Does it react as I'm expecting, which could be our signal, or does it just break them and then continue? If it does that, and I sit on my hands and I don't do anything. But the only thing I wanted to show right now is the fact that there is the pivot point, which is very popular with a lot of traders, and it's right there. Price is having difficulty closing below that on the 5 minute. It is getting there, and it's always, so far, it's been leaving wicks and rejecting that pivot point. So we'll have to see what it does. Maybe it will come and retest it for the third time and go up, but perhaps it could also just squeeze before, because a lot of people will be having their stops here, right? Squeeze this before and then go the direction that we expect. And the other one is, of course, that could be, the last thing it does, and before it breaks the structure, which would be something like this. And each one of them is telling us something, which is, if it breaks it and it can't hold it and then goes the other way, then we know that's the first sign that consolidation, the range bound movement we have been seeing in the market, is coming to an end. But it's the pivot point that I wanted to show, Jonathan. Before you proceed, go ahead.
Yeah, so looking at we got the 1 minute right here. Now, on the 5 minute, we still have the wicks here. Now we're seeing a slightly different scenario here, I would say, but I would still be buying that support I'm also looking at the 1 minute, and I do see when we have a double bottom like this, I don't want the neckline to be like a downtrend. So what I see here is I feel like this is a downtrend. Yes, it has sort of like a double bottom, but the downtrend is more obvious than what this double bottom would be as a double formation. So if you look at the double bottom right here, that's a clear double formation. I mean, a bottom formation. You get a downtrend, and that double bottom breaks the structure of the downtrend. But this is part of the downtrend, so I'm not viewing this as a bottom formation. What I need is the 5 minute to come down here, and yeah, I'm not really sure what I need to see now. I guess that becomes evident when I actually see it. But I need a bullish reaction that is printing closer to the level. But it's clearly a lot of buying pressure in here. What I don't like is the fact that we have those 2 wicks. I don't really like buying after wicks like that, because it tells us that there's a lot of buying pressure, but
Not
now
enough
sellers are starting to
push
take
price.
over. Yeah, exactly. It's I don't know. Maybe
it's consuming the buyers and still
yeah,
not
exactly.
going up. Yeah.
I like this question. This is a great question right here. Yeah, I have.
Have
I've
you,
had,
Jonathan?
yeah.
Maybe you should consider swing trade.
Yeah, maybe I should consider swing trading instead of scalping. Yeah,
We all know you're a big scalper, but maybe swing trader could be something for you.
Yeah, next week I will start the swing trading challenge. No, jokes aside, I've been swing trading for the last 7 years, and I'm doing the scalping exercise as something to actually help me with my swing trading, and also fill a void
in time.
Like what like in the live streams as well. Like I want some actions. I want to try to get some actions in here, but also like what am I supposed to do because with my swing trading, it's like I'm spending 15 to 30 minutes in the morning. Like at London Open, I spend 15, 30 minutes placing trades, removing trades, or moving orders, and that's it. That's my swing trading. So what else am I supposed to do rest of the 12 months? 12 hours. It's going to be, but that's so. Yeah, I think. What?
Go biking on the mountains.
I could do that, yeah, but I would rather sit and stare at the 1 minute Euro USD chart. Okay, so another wick on the 5 minute, and on the, yeah, you know what? I'm not feeling this. I feel like its price is too compact here. It feels like we're creating a 1 minute range here. Looking at the other times the 1 minute has tested this area, it's just much cleaner price structure. It's much cleaner. I mean, not sure that I'm liking this. It's just giving me a different feeling than these tests right here. No, I would say that I'm almost like a hybrid trader, because if you look at my trading view, where I do have the GBP NZD trade.
Look at that move.
What move? EU?
Oh, yeah, EU on the 1 minute.
Wow.
Look at that.
Okay, what's going on? I gotta pull up MT5. What is going on here?
It's on the 1 minute, okay, but it's clearly consuming and pushing quite hard into those levels that we just talked about.
Okay, the 5 minute is closing now.
And what you read was on spot with the wicks not being able to
just completely die.
No, there is no news. There must be something, because it's 4 o'clock. There must be something that came out at 4.
It's like MetaTrader just stopped working.
Oh no, I don't know, but it is
okay,
spiking quite lower.
The 5 minute, it should be a new candle.
This is the new candle.
Is this a new candle that just opened? Oh, okay.
Yeah. See, that's what I mean. Or that's what you mean as well, Jonathan. The area. I think you did you mentioned something quite telltale here, that the wicks were coming in, but the price was not
Yeah.
pushing up, right? So there were buyers in, but they were weak because of how what it happened. There was no follow through on those wicks, right? Those rejections. That's buying power coming in, but not really pushing price much higher. And they kept doing that until it broke down. And the other thing
And I remember, like, yeah, I said, like, there's something wrong here,
Yep, that's it. I think the other thing that I mentioned was that this area, the pivot point, will be seen for, there will be stops below that. So if it pushes, there will be a cascade of uh, traders being stopped out, and you get these kind of movements, big candles, and we'll have to see if what this wick will produce in the end. But it's very interesting, right? It moved about, what is that, 14 pips in a couple of minutes, and we'll see if it closes like this, then it's bullish. But if it can push up from here, then it's a bearish sign.
Yeah, a price action like this, it's just not for me. I'm not touching this. When I see, like, I want a more. I mean, I like volatility, momentum. It's great, but I need a little bit more structure. Like, this is not for me. All right, we are at the 2-hour mark right now, and I think this is a great way to perhaps end the live stream today. Yeah, if you guys, if you see something like this and you're not really sure what to do, then the best move is to do nothing at all.
Yeah.
All right, next week I'm gonna try to get some more guests on. We'll see. We have some people on the line, and we're gonna get Saul on back as well. We're gonna do some more live scalping with Saul, and we're also gonna continue with our live our swing trading here as well. I think that's it. Anything? And yeah, don't forget, guys, we're doing the All for One challenge in the Discord community as well. So if you have access to if you have a program and you're not in Discord already, make sure that you go to the 5ers hub and join the Discord. And don't make sure to hit that like and subscribe to the channel. We're coming up to 45,000 subscribers soon, and I've promised a small little giveaway when we do hit that number. So make sure that you click that subscribe button as well. All right, Victor. Any last comments before we go?
The timing of price action is perfect, because as we are closing this live stream, I get some action here. I like the price action because that is the area that we need to see something happening, and for sure something is happening here. If you look at the 1 minute, we are leaving behind a huge wick, and we're now showing a engulfing. Guess what? That is the market pushing, stopping people out before it changes direction. If it continues, you have to wait for that follow through. But this is what it looks like. It's kind of how do you say that? It's not what you.
Sick.
Yeah. That's
big move.
Because it tricked everyone else, and the other way around, and then moves the direction that you actually wanted, you expected, right? We have on a higher time frame, we have a bullish bias, I would say, be the structure, the consolidation, the impulsive move. So it did make sense on the higher time frames, that on the lower time frame it goes and take out some lows, but then reverses on the traders that were thinking this is the breakdown, this is going to go down, and we need to be shorting this. But you have to wait for the follow through. This is just a couple of 1 minute candle, even though they look to be very powerful, and it could be the beginning of something. But don't get trapped, because price tries to fake movement all the time on both directions. So that's something I think we need to be aware of. But I don't have anything else. I enjoyed this stream with you guys in the audience a lot, with Saul, and we have a lot in store for you. in terms of
Yes.
more more guests coming on. We're always looking for more guests to come on to bring you more value, to add to your growth potential, because that's the goal of this live stream. We're focusing on you becoming profitable, you becoming, gaining money that makes sense, and rewards all that effort you've been giving into. And I'm sure you've been giving up a lot of things, time, and other missed opportunity, because you're focusing on trading. So hang around, stick around with us, and you will be rewarded heavily with in terms of content and value that will be helping you for your future growth as a trader. All right, that's everything I have.
It's very well said. Thank you for that, Victor, and you're absolutely right about that. All right. On those words, I would like to thank you all for joining us this week, and I hope to see you all next week as well. And yeah, that's it. Take care, guys, and see you next week.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube